Policies as low as $1 a day. Answer a few health questions and get your free quote at ethos.com/term. That's ethos.com/term.
I'm Ed Evans, CEO of Consumer Cellular. We're dedicated to serving people 50 and up like me. Our needs are different. Big Wireless wants us in an unlimited plan, but if you're not using all that data, you're probably getting used. At Consumer Cellular, we're focused on affordable, reliable plans, including data that suits your needs, not ours. Our plans start at just $20, and you'll get the best customer service in the business.
Call 1-888-FREEDOM or visit consumercellular.com/facts. Plans include $5 credit for auto pay and e-billing. See site for additional facts.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Inflation and Your Retirement Plan. Mike, why is it so important for retirees to account for inflation in their planning?
Yeah, massively important, and I think any retiree over any course of history will tell you that. And when you experience inflation, when you're on a fixed income, it's tremendously difficult. But even small changes in the rate of inflation, or seemingly small ones, can really lead to massive changes. For example, if you're facing 2% inflation, that means that prices roughly double every 35 years. If you're looking at 4% inflation instead, those same prices double only in 17 years. A huge change to your budget.
And obviously, this also then influences, your overall spending habits and your withdrawal rate over time. These are things that you have to account for in your planning. You can't just assume that you're going to necessarily see the same kind of inflation that you've seen previously in retirement.
Yeah, look, I think generally speaking, over the course of the last 20 years, while there have been massive drawdowns in equities, the inflation figure has remained relatively stable. If you're worried about something that could look different from that over the course of the next 20 years, then it's important to really consider what that would mean for you.
Our guide this month is titled Inflation and Your Retirement Plan, and there are two ways you can request it. The first is by calling 800-393-4001, or you can request it online at armstrongadvisory.com. That phone number again is 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you, and it's a little stinky out there in markets today. Just kind of, your nose gets all turned up with what you're seeing as we, continue to see stocks selling off modestly. 3 days that we've seen now, stocks in the red. Obviously, we'll have to see if that continues over the course of the day here. But again, just kind of a little bit of a gnarly start to the day. Stocks recovering a little bit now, and we'll keep an eye on them. But obviously, we have yet to see any kind of protracted downturn in stocks. The longest that we've gone has been maybe like 4 or 5 days occasionally in the last 4 or 5 months where it looked like things were getting dodgy and the S&P fell 2, 3, 4%, and then things bounced right back. We have not even had a 5% dip in equities since April. So
I was going to ask that. I was guessing we haven't seen one since the tariff announcements.
No, we haven't. The last time that we saw a 5% dip was it was that kind of secondary bottom on April 21st that we got. And other than that, it's just been these little 2, 3, we're a little nervous for a couple days, and then, we kind of bounce right back. So we'll see what we get with this one. But at this point, stock's under a little bit of pressure, and, we'll just kind of have to see how it goes. We did get a bunch of economic data this morning. I'd like to start with the jobless claims data, if that's cool with you, Michael.
As would I.
Fantastic. 2 weeks ago, we flagged that jobless claims, weekly ones, new initial ones, were elevated. And we specifically pointed out, hey, a lot of this looks like it's due to some kind of anomaly in Texas. We don't really expect it to repeat, but claims have generally been climbing, for a few weeks, and so let's see what happens, but we don't think this is going to turn into anything. The subsequent 2 weeks, including today's report, have pretty much confirmed that on the initial jobless claims front. A further decline in initial jobless claims to 218,000, and so we continue to be in a situation where, hey, even though there are some concerns about the slow pace of hiring, there is nothing out there that suggests any pickup in firings or layoffs right now, Mike, and that's good news for the labor market.
It is, and I have to try and wonder and contextualize. Like, I can be concerned about the pace of hiring, but I have a very difficult time having a perspective like the Fed is taking right now of grave concern about, I wouldn't say grave concern, but legitimate concern about the labor market when you're just not seeing the layoffs, right? Like, I just don't know if that is really an indication, hey, weak hiring for, what are we on now, 3 or 4 months is genuinely an indication that the labor market is so weak that the Fed should be doing what they're doing right now. Obviously, they feel that it is, but without corresponding upticks in these jobless claims, these folks filing for unemployment, I just remain unconvinced that we have a really weak labor market right now.
So I think the case that the Fed will make, and this is the case I would make at the Fed, and by the way, I don't think they're off base in starting a cutting cycle here just to see kind of how things develop. I don't think there's a problem with what they did last week. I think the case that they will make is, number one, labor is typically a lagging indicator. It's not something like we have never had a recession where everything's just been humming along, and then companies say, you know what, let's lay a bunch of people off, and that triggers the recession. Right. Like we've never had that. Layoffs are an ancillary effect because ultimately what we see is consumption leads employment. And what I mean by that is, let's say that you are you are a business. You are going to transform yourself into a company. You're like, ho ho ho, here I go.
So I'm not the president of a company. I just am now a business.
You are Mike Armstrong Incorporated.
Got it.
Okay, and you're walking around going ho ho ho, business good, ho ho ho, because that's what sound LLCs and corporations make.
Sound a lot like Santa. Okay.
I bet he has a corporation. Someone's got to pay the elves to make the toys.
Yeah.
So ultimately, what happens is you see an uptick in your business, and instead of needing to make 100 widgets for the month, you have to make 110. That extra demand that you see causes you to go out and say, I need to go and hire people. The converse of that is, hey, you're selling 100 widgets a month, and you don't suddenly just say, no, I'm going to get rid of people because I'm not making enough money. What you say is, gee, now I only have demand for 90 widgets a month. I don't need all my staff. Because of that decrease in consumption, I'm going to go lay off, X number of people. And so this is why labor tends to be a lagging indicator, whereas consumption and, housing tend to be forward-looking indicators. They're leading indicators because ultimately it is the demand that historically has, led to either hirings or firings, rising and changing at any particular point in time. So I think the case that the Fed would make is, yes, it's true that there's nothing huge that we're seeing in terms of layoffs right now. There's no meaningful uptick, quite honestly, in layoffs. The case that the Fed will make is, hey, we can tell the labor market is weakening, though, because unemployment's moving up. And usually when it starts to move up, aside from a couple instances, one of which was last year, by the way, it doesn't usually just have this spontaneous stop that it goes through where it's like, oh, gee, we're okay. We've laid off enough people, and now let's continue on. It usually keeps rising until additional demand intercedes, and that's what the Fed tries to do through cutting rates is produce additional demand. So I think that's a
reasonable perspective, and as business in this example, you're right. You are pretty hesitant. I would say you're more hesitant to lay off that person than you are to hire that new one. In most cases, that propensity to fire that person and deal with all the implications of it, deal with all the risk of it, deal with the benefits that you need to pay, it's complicated. It's also just, from a human perspective, frustrating and disappointing and sad sometimes. And so, yes, that propensity to lay off does come last in the business cycle. And so, a good jobless claims reading like we're getting this morning does not necessarily indicate a strong labor market. I can see what you're saying.
The other thing that's kind of interesting, just that I think about as it relates to the labor market, is I wonder how much of this is being influenced by what we went through in the last 5 years with labor, where, you could see the case being made on both sides, where in 2021 and 22, when unemployment was just plummeting, and it was, remember how hard it was, how much of an employees or a job seekers market it was.
Walmart
at that time?
Was offering six-figure truck driver jobs. McDonald's was offering $1,000 signing bonuses.
Yeah.
You had a very unique labor market that we haven't seen in a long time.
So I think in two different respects, I think companies today might say, man, it was really hard to hire people the last few years. I'm going to hold on to my employees as long as I can because I don't want to go through that again. Because that's their recent experience hiring has been, man, this is really hard, right?
Yep.
The other piece is there are a lot of companies that did admittedly
hire too many people because they thought that the demand and growth from 21 and 22 was just going to continue forever. And so there are other companies out there that are like, I hired way too many people in 21 and 22. I don't want to go and hire more people now unless I absolutely have to, because I don't want to go through that again, that overhiring. And so I think you can make a case that some of the stagnation in the labor market could be because companies are looking at what happened 2-3 years ago and they're like, not going to make the same mistake I made.
Yeah. But I think generally speaking, when you look at the aggregation of all the data, you can come up with a compelling argument that, yeah, businesses are in a contraction type stage right now, and that is taking the format of hiring, freezing new hiring, maybe reducing hours here and there, but not quite to the point of pain where they say we are laying people off. That seems pretty definitive. And you know, they're trying to read this labor market right now, and I think it's a very different labor market depending on what sector you are hiring in. If you're looking for that new entry-level investment banker, it might be pretty easy to find them, whereas if you are looking for the tradesperson to go help you build a new data center, good luck.
Now, the other piece here is, even though the initial claims data continues to be fine, like there's no sign of stress in there at all, the continuing claims data is still problematic, but not really worsening. It's just this steady eddy, hey, continuing claims are, rising 5 to 6% year over year, which isn't good. Like, that's the evidence of the labor market weakness that you have, is that continuing claims continue to move up on a year over year basis at a pretty decent clip, but they're not accelerating to that 10% plus where you start to really get nervous, nor are they showing any signs of improvement. So you're kind of like, yeah, no one's getting fired here. Not no one, but, firings are low. Hirings are low, and hirings are low enough that continuing claims continue to move up, and that's the problematic piece that the Fed's trying to get ahead of, I think.
Yep.
So, we've covered weekly jobless claims. Let's take a quick break. When we come back, let's talk GDP and existing home sales. That's the other one. We'll talk those data points when we return.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Every dollar you've saved in retirement accounts and life insurance tells a story of hard work, smart choices, and the future you envision for your family. One way to help that story end well is to make a beneficiary choice that does more. This month's free guide from Cushing & Dolan, IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection, explains how naming your estate as the beneficiary of your IRA or life insurance can add a layer of tax efficiency and nursing home protection, while still allowing your spouse access when it matters. It's about keeping more of what you've built working for your loved ones now and in the years to come. Get your free copy today by calling 866-848-5699. That's 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
Couple other data points from this morning. We got a third update on Q2 GDP, and we got existing home sales data for August. Which one would you like to continue with, Michael?
The GDP was, I guess, a little bit more surprising than the existing home sales, I think. So you want to jump right in there. We saw inflation-adjusted GDP coming in at a revised 3.8% annualized pace. Again, this isn't massively surprising. The last reading was at 3.3%, but that's a fairly significant uptick if you're talking about a 0.5% annualized uptick in GDP. And coming off of the previous quarter, which was defined by a lot of tariff-related rushing of activity. What's your overall read, Chuck, on this surprise to the upside?
Yeah, the big jump seems to be in consumer spending that came in stronger than previously reported, jumping from 1.6% growth in the quarter to 2.5%. So that seems to be like the main driver of it. It's obviously good news. It doesn't affect anything that's going on in markets or the economy today. Again, this is 3 months backward looking at this point, which is why no one really gets too excited about this. But it is something where, look, if you are looking for questions as to Fed policy, hey, if you have consumer spending that's stronger than you previously thought it was, again, remember, consumption leads employment and things like that. Hey, it makes the Fed's case weaker in this case that they should be, cutting significantly if consumer spending is still moving along at that kind of clip.
Yeah, it is really, really tough to digest all of this, right? On the Fed side, on the White House side, you seem to have a real push to lower interest rates. Certainly on the White House side, certainly on Stephen Myron, the new appointee to the Fed, calling for, I think it's now like 100 basis points of cuts between now and year end to readjust things to normal. And you can get that because you see how weak the hiring was in this quarter that GDP is reporting on. On the April, May, June quarter, we had, was it May, June, July hiring that was really bad, Chuck?
June, July, August.
June, July, August was particularly weak. Okay, so I guess we don't have a real solid sense of where consumer spending came in after the fact. But look, even at a time when people were reportedly concerned about the state of the economy, reportedly concerned about what tariffs were going to do to prices, they were still buying stuff at a pretty hefty clip. Now, maybe the argument is just they're trying to front run the tariff still. But I don't know. The more time that goes on, that consumer spending keeps up, I have a tough time calling it as, hey, this is going to be the leader into a recession.
Yeah, and if you look just at where we are in Q3 right now, the estimates that I've seen on Q3 GDP are anywhere between like 2.2 and 3.5. So like take the midpoint of that and say, okay, we're probably coming in, high twos for GDP growth. That's better than expected as well. A lot of people were thinking that you'd be somewhere in the range of, high to mid ones. And so it looks like Q3 GDP is going to be coming in stronger as well based on the data that we have so far. We're still waiting on quite a bit of, we don't have any data for September yet, so we don't know how things have evolved through the last 3-4 weeks. And one of the interesting questions that we do have to watch for is, hey, if there is a government shutdown, we're not going to get a whole lot of economic data during that time because the agencies that are responsible for it are generally deemed non-essential, and so you might not get a jobs report next week if there is a shutdown. So we might not know how the economy is evolving during that time necessarily.
Right. One other piece about not the immediate future, but the not-so-distant future that I'll be interested to see. I don't really get the sense that many people have digested what the One Big Beautiful Bill Act actually means for their tax situation. I talk to retirees over the age of 65 almost every single day. Very few of them have really put together how that is going to work out on their tax refund. I speak a little bit less frequently to people that are affected by the tips, the tax on tips piece, but both of these things I think are going to be a pretty legitimate surprise to the upside in terms of tax refunds next year. And that's just going to be another big jolt, I think, especially on the senior side. Those over 65 years old who aren't reliant on the labor market to really drive their spending in the first place. I'll be interested to see where that comes in because a whole lot of people are going to be saving a boatload of taxes when they go to file in April of next year.
And the other piece that you have to watch on that is also, you've got the bonus depreciation that kicks in for businesses,
right.
That is going to allow them to, expense a larger portion of, any CapEx next year as well. And so that's something where you sit there and you say, as businesses are getting their 2026 plans in order, are they, planning for additional expansion next year that could drive additional economic activity too? So there's quite a bit out there when you look at it that, in my mind, that like the window for any kind of economic slowdown to take hold, probably like again, it's really short now. It's maybe the next 3 to 5 months or something like that. You get through that and you kind of look at the situation and you go, there's not really, just because the fiscal side is going to be stimulative once you start getting into late Q1 of next year. And so it's tough to see a situation where even if there is a recession or downturn, it's unclear that it lasts very long, in my opinion.
Right. Yeah, I'm with you.
So that's what we're seeing for the GDP numbers. The one number that continues to just not really be great, existing home sales came in at a 4 million annualized clip. We've just been hovering around that 4 million number for quite a while, and the story is really simple. It's people can't afford houses the way they are currently priced by the market. And the interesting thing, Mike, the inventory that's out there, we've been seeing in the last few months an uptick in the number of units that are being withdrawn from the market rather than seeing price cuts.
Yeah.
And I saw an interesting piece on this. I forget who put it out today, so I have no source on it. But apparently the big reason for those withdrawn sales, a large chunk of them are properties that were purchased in the last couple of years. And because of that, especially if you're talking places like Florida and Texas and that Sunbelt area, prices have been falling there. People might not have the equity to be able to sell at lower prices than what they're trying to sell at today.
Yeah, it'd be surprising to be talking about underwater homes, but yes, in some parts of the country, that is a legitimate possibility.
So that's something I think that bears watching. But I can tell you, we were talking about this on the show yesterday. It's tough to see a bounce in housing unless mortgage rates get down into the mid-5s.
Right.
Especially since, again, the Fed started cutting interest rates, last week. Hey, 0.25% down. Great. This will help the housing market. Not so fast. You're in a situation now. The 30-year fixed-rate mortgage nationally, according to Mortgage News Daily, up a full 0.25% since this time last week. Quick break here. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection. Learn how naming your estate a beneficiary can reduce estate taxes, protect assets from nursing home costs, and avoid the 5-year Medicaid waiting period. Call 866-848-5699 to get your free guide today, or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest risks to retirement isn't just market volatility, it's longevity. People are living 25 to 30 years after they stop working, and that gives inflation plenty of time to work against you. At just 3% inflation, your expenses double in about 23 years. Add to that the fact that healthcare costs typically rise faster than general inflation, and your later years could be your most expensive. Without a plan, that combination can put real pressure on your savings. That's why we've put together a brand new guide called Inflation in Your Retirement Plan. The guide shows you ways to balance longevity risk with rising costs and strategies that may help you make your money last through decades of retirement. Call 800-393-4001 to get your free copy today. 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to deal with qualified retirement plan assets, and can they be transferred to these irrevocable Medicaid trusts?
So this is a tough asset in general. When you're dealing with retirement plan assets, it's difficult from an estate planning standpoint or a Medicaid planning standpoint to deal with them. Why? Because they have both an income tax component and an estate tax component, right? They're taxable when you take them out, and when you die, they're subject to your estate tax. So the general way to do this would be, one, you can name the spouse as the beneficiary of the IRA, or you can name the kids the beneficiary of the IRA, or sometimes you can name the trust the beneficiary or the estate the beneficiary. But it all depends on the size of your estate, the size of the IRA. But the one thing you really can't do is you can't take the asset and transfer it to the irrevocable trust or revocable trust while you're living. Otherwise, it will create a income taxable event. So tough to plan for those in advance unless you name the estate the beneficiary.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary right now by calling 866-848-5699. That's 848-5699, or you can request a copy from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in the red at the moment as Wall Street digests a new batch of economic data points, including better than expected jobless claims and an upwardly revised second quarter GDP reading. We also have existing home sales streaming in about half an hour ago. Right now, the Dow is down by nearly 0.1% or 36 points lower. The S&P 500 is down 0.4%. NASDAQ down about 0.5% lower or 105 points. Russell 2000 is down over 0.9%. 10-year Treasury yield up 3 basis points this morning at 4.183%. And crude oil down over 1% lower, trading right around $64 a barrel. Shares in Starbucks dipping modestly after the coffee chain announced a $1 billion restructuring plan that involves closing some of its North American stores. Furthermore, about 900 non-retail employees will also be laid off, marking CEO Brian Niccol's second round of layoffs since he took over. Meanwhile, Oracle shares are slumping another 4% today as worries around the AI trade continue to pressure the stock. Separately, Rothschild & Co. Redburn initiated coverage of Oracle with a sell rating, saying the market is materially overestimating Oracle's cloud revenues. Sticking with tech, where Bloomberg reported that Intel has approached Apple about investing in the chip maker. However, the report notes that talks are in the early stages. Earlier this month, NVIDIA said it would invest $5 billion in Intel. Intel shares are up 5% now, while Apple shares are up over 0.5%. CarMax sinking 24% lower at the moment after the used car retailer saw its quarterly results come in below estimates. I'm Tucker Silva, and that is Wall Street Watch.
Mike, can we take a quick detour?
Let's do it, Chuck. Where are we going? Argentina?
No.
Oh, okay.
Autos.
It's supposed to be nice this time of year.
Argentina? Yeah. Lovely. It's springtime.
Yeah.
So I want to talk about what's going on in the auto sector because something stinks.
Is it diesel?
There's a problem there, and look, the auto sector is not the size of housing. It's about 1/10 of the size. So you can never have an auto bubble that looks anything like the housing bubble did for a whole number of reasons. But I got to tell you, you had this bankruptcy of Tricolor. When was that? Like a month ago? 2-3 weeks ago?
I think I missed that. Maybe I was on vacation. What's Tricolor?
Oh, so Tricolor is they're a huge subprime auto lender.
Oh.
They ended up going belly up. I'm trying to see when it was. This was early September. They operate mostly out of the Southeast and through Texas, and basically they do a ton of subprime auto financing.
Okay.
And it turns out that a lot of banks were holding loans that they had initiated. Just as an example, Fifth Third Bancorp declared a $200 million loss from a, quote, alleged fraudulent activity at an unnamed commercial borrower. It's probably Tricolor.
Got it.
But they filed for Chapter 7 bankruptcy, not Chapter 11, which means they're doing a full liquidation. Everything must go. They can't restructure the company. It's just, get everything out. And so I look at that and I say, okay, there's a problem that's that happened there. Is it isolated? One's kind of okay, see what's happening. You start to see a couple other signs popping up and you go, okay, maybe there's more here. So this CarMax thing I look at today and I'm like, ooh, that doesn't really feel great either. You've got the story yesterday about Ford saying, hey, we're going to, start trying to offer, less qualified borrowers lower interest rates in order to move F-150s.
Good call.
And I kind of just look at, what's going on in the news flow out of the auto sector, and something stinks. And I don't know.
I guess my question is, why now, right? I mean, because we've been talking about subprime and extended auto loans out for 7-8 years for quite some time now. I guess the answer in terms of what's different is that we're now 3 years into those interest rates being a lot higher than they previously were, and that could explain some real problems going on in the sector because, right, like I think a lot of these same issues probably existed back in 2019.
Yes.
But you were still getting auto loan rate, even if you were subprime, in the 6 or 7% range, which is now like 12%.
And Tricolor, they also operated a set of dealers as well. So it wasn't just an auto loan company. Like they operated dealers too. And so I guess like I'm just looking at this here, and it feels like something ugly is happening with the auto sector.
Right.
But I don't know where it goes, and I don't know how big it is. But like something stinks here, and like you don't get two stories like this in 2 weeks where you've got the Tricolor thing and now CarMax, with what's going on there. These are not isolated incidents, in my opinion. Like something stinks in the auto sector, and I don't know what it is.
The counterpoint would be that the underlying collateral is not bad. Right? Like just thinking that through for a minute here, like we're sitting on cars that are still holding their value fairly. I mean, look, every car loses value pretty quickly, but these are not exactly having a tough time reselling F-150s right now.
So the counterpoint to that is the repos for, like, again, because you're looking at this right now, and again, if you've got a liquidation event going on here, you got a whole bunch of repos that need to go into action in order to start making creditors whole.
Sure.
What happens when that inventory hits the market? I'm just thinking through this here, and I don't know what the situation looks like on it.
Right.
So I just think there's something weird that's happening with the auto sector right now. I don't know what it is. I don't know how big it is, but like it feels like there's something there. Like you don't get a random bankruptcy that comes out of nowhere and just say, okay, like everything's hunky-dory, and then again you've got CarMax coming out and being like, yeah, things were really not good in our earnings. These things fit together. Like there's a story that's developing there, and it seems like it's going to cause some problems here.
Yeah.
So we'll see where it goes.
It's been immensely unhealthy for quite some time, but let's just compare it to something that will not have the same impact. But this was the entire threat that the economy was under and that the housing market was under leading up to the subprime mortgage crisis.
Yes, it's just
all the banks suddenly realized, hey, we're holding all this debt, and if the interest on that debt starts increasing, then nobody can afford the payments anymore. And so what is the actual value of these things? Again, the auto loan space does not have the ability to sink the economy in the way that the subprime mortgage crisis does. But we're talking about the same things.
It's still a problem.
Scales.
It's again, you're talking about something that's a tenth of the size in relative terms.
So then the curious question about all that is who actually owns this garbage?
No idea.
Right, like some banks probably, some private credit companies undoubtedly. It's probably all over the place. But yeah, you could have more banks and other financial institutions talking about these loans going sour over the next few months.
I've seen there was something else. There's a parts manufacturer that said that they were going through something as well. So it's like, I'll see if I can pull up the name of them. But there's a few things here that just look dodgy. I'll see if I can get the name of that parts manufacturer and what's going on. Government shutdown. Good news.
Wednesday of next week?
Wednesday of next week. And I'd say the odds on this are pretty likely at this point.
I always hesitate to say, but yeah, the way that things are being talked about, it seems quite possible.
How long does it last? Is this something that lasts 10 minutes or 10 days? Who knows? I mean, these never last forever. The big questions are going to be, how long does it last, if there is one? And the second piece, which is an interesting wrinkle, is that the Office of Management and Budget is advising agencies to potentially look to permanently reduce any or portions of workforce that are furloughed during any potential shutdown. So basically saying, look, if you have people that are going to be furloughed during the shutdown, draw up procedures so that you can make those furloughs into permanent layoffs, because we could use this as a chance to reduce headcount within the federal government.
Right. So we'll see if that actually...
Yes.
Yeah, I just don't know if that's a bunch of bluster or if that is a legitimate threat.
Yeah, it's again, we're going to have to see how this develops over the next week or so, but these are just the things that are being talked about as it relates to a potential shutdown here. Let's take a quick break. When we come back, we'll talk H-1B visas after this.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Inflation, housing costs, and rising interest rates are putting pressure on families everywhere. From higher insurance and taxes to volatile markets, today's economic landscape is changing fast. This is Chuck Zodda from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall, first at Margaritaville Resort Cape Cod on October 9th, and next at the Showcase Superlux in Chestnut Hill on October 16th. Call 800-393-4001 to reserve your spot. We'll discuss how to manage risk, protect your retirement, and create a plan that can handle economic ups and downs. Whether it's core inflation, market volatility, or policy changes, you'll learn about strategies that may help you plan smarter. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This year's DAV 5K is officially sold out, but you can still help our great American heroes. The race is Saturday, November 8th at Castle Island, and you can visit dav5k.boston to make a donation of any amount to support our troops. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today.
Mike, I found the auto parts story that I wanted to cover as well, because, again, this is all dovetailing just into my general unease with what's going on in the auto sector.
Please.
3 days ago, there was a report out that First Brands Group, who no one has ever heard of because... Does anyone know, like, any major auto parts manufacturers? No, you don't. First Brands Group, they're a big auto parts manufacturer, and there was, rumors at the beginning of this week that they may, have to declare Chapter 11 bankruptcy, which would be a restructuring. Today, this reported 3 hours ago by the Financial Times. I'll read from it because it does a great job here. Entities tied to First Brands Group and his founder, Patrick James, have filed for bankruptcy protection in the U.S., compounding issues at the car parts supplier. So not the company itself, but entities tied to it. Carnaby Capital Holdings and several entities that raised debt linked to First Brands filed for Chapter 11 proceedings on Wednesday, raising the likelihood that the business itself is on the brink of bankruptcy. First Brands, a U.S. maker of windshield wipers and fuel pumps, has come under intense scrutiny for its use of off-balance sheet debt tied to invoices and inventory. Some lenders fear this financing was poorly disclosed, making it difficult for creditors to know how much debt it had in total. Certain creditors estimate that First Brands raised as much as $10 billion in debt in off-balance sheet financing. And here's the other part that I want to hop forward to. The group's unraveling could lead to soul-searching in the booming private credit industry, which has raised trillions of dollars from investors to lend to mid-sized companies that tend to be highly leveraged but with little public disclosure. And this, to me, is like the meat of the entire thing in two different places. Number one, look, there's clearly something happening in the auto space. Like this is three things in the span of 2 weeks. That doesn't just happen. There's something bad that's going on in the auto space. The private credit angle is one that I hadn't thought of, but it kind of makes me wonder, look, we've been seeing volatility creeping up for the last week or so. Even when stocks were rising at the end of last week, volatility, like metrics, like the VIX was rising, and you had, concerns that were building under the hood, and I couldn't quite figure out what it is. I wonder if there's just like this private credit issue that's finally coming to a head as part of this, because if there's one place that no one has any idea what's actually going on, it's the debt of these like mid-sized companies that are all financing through private credit, and none of the debt is publicly traded, so you can't see how it's actually trading. Yeah, I don't know. I'm just speculating, but I'm trying to tie this all together, and I feel a little bit like Charlie Day in Always Sunny, but this is my wall of strings.
Hey, this fall, why just watch the leaves change when you could watch the sunset over turquoise waters? Well, the U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then explore Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry over to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean, the U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mike, we got a couple pieces today on the H-1B visa application fee changes and how that may impact the U.S. workforce. What kinds of things are being talked about here?
So we're talking about a $100,000 new fee, and here's what it seems to be coming down to is, one, a lot of scrutiny on the companies who are heavy users of these applications. It seems to be one thing that both Democrats, or some Democrats and some Republicans, can agree on, is that they want to scrutinize those companies that use a lot of them and ask the very obvious question, are you using these the way they're supposed to be used, which is hire foreigners on an H-1B visa for specific skills and pay them the going rate for the same employment that it would cost to hire an American in that role? Or are you doing what everyone's accusing you of, which is dramatically lowering your employment costs by using H-1B visas? And my guess is it's more towards, it's probably a little bit of both, but more towards the lowering the cost of employment. But the other big, kind of economic question to all this, which I have a tough time answering, is, okay, so you've put a much higher value on these H-1B visas. If I'm Amazon and I genuinely need this work done, and I would have otherwise hired somebody on these visas who's going to pay taxes in the U.S. and work here, rent a home here, might I just consider opening a bigger office in Bangalore and hiring the same person?
Maybe, right?
If my real goal here is reducing wages rather than getting the specific labor, or even if it's both, do I really need that person inside the borders of the United States? For Amazon, maybe 1/10 of the work that they do, the answer is yes. Right? Like, hey, I'm working on the storage, the cloud storage for the Pentagon. Yeah, they're not going to let you do that out of Bangalore, or at least I really hope they're not. But for 90% of the other work that Amazon does, do I need that person here? Today, I would say the answer is I need that person in the United States less today than ever before in history. And that will just continue to be the case the better technology gets.
Yeah, and the estimates that are out there are that somewhere in the range of like 60 to 70% of H-1B visa holders work in computer-related occupations. Mm-hmm. So it's like it's a lot of them are potentially jobs where you don't necessarily need that person in the United States. There are others where you might say, yeah, maybe you do need to have, like, some of these people need to be here, but it's disproportionately concentrated in computer-related professions at this point.
Right. And by the way, I'm not saying that I think it's a bad idea to go this. I think this is a solution that, in my mind, is far away better than the current solution. So I think it's an improvement. I'm just interested to see the effects.
Quick break here. Hour 2 coming up in just a bit.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline Qualification application line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month on the topic of inflation and your retirement plan. Mike, a lot of people listening might be familiar with the idea of the Consumer Price Index, the CPI, but rare is it that we find someone whose own personal rate of inflation exactly matches the CPI consistently.
Of course, we all have different spending habits. We all live in different parts of the country and have different effects of inflation. But I think a great example here, Chuck, is during a large portion of the 2010s decade, CPI was relatively in control, and people got very little in the way of increases on their Social Security. However, healthcare inflation was pretty hot, and Medicare prices went up pretty dramatically during that period of time. And that is one area that dramatically affects retirees that doesn't play into CPI all that much and resulted in people seeing their Social Securities just not growing a whole lot during that 2010 decade. And so you really do have to evaluate the risk of, hey, here are my spending categories, and how might things like changes to the labor market or changes to energy markets, if I live here in the Northeast and I can't get natural gas and I'm instead relying on oil prices, how could those changes really affect my future finances?
Folks, our guide this month is titled Inflation in Your Retirement Plan, and the way to request it is by calling 800-393-4001. You can also request it online at armstrongadvisory.com. The guide again is Inflation in Your Retirement Plan, and that phone number to call is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and we've got markets continuing to sell off modestly. Nothing crazy. Earlier today, we did see the S&P approaching a 1% down day, but markets have rallied off their lows, and as we sit here right now, the Dow Jones Industrial Average is down 75 points, about a little less than 0.2%. S&P 500 down 31 points, about 0.5%, and the NASDAQ off 121 points, also about 0.5%. In the bond market, 10-year U.S. Treasury is up 4 basis points to 4.18, so that's going to put more upward pressure on mortgage rates. Remember, Mike and I talked about this last week. Just because the Fed is cutting doesn't mean that mortgage rates move in the same direction. Right now, this is very much rhyming with what we saw in the third and fourth quarter of last year, where the Fed started a cutting cycle, and mortgage rates promptly went up almost 1%. We're not quite there yet. They're up about 0.25% from where they were when the Fed started cutting last week, but we'll continue to monitor this and see where they go. Other things happening in markets today. Oil down 78 cents a barrel on West Texas Intermediate to $64.21. A little bit of a pullback there after oil had risen to a 7-week high. And we've got gold down $6 an ounce to $37.62.50. Mike, let's. Do you want to hop in the plane and head to Argentina?
Let's go.
Okay.
Get some beef.
So Argentina's going through a little bit of a balance of payments crisis at the moment, or at least it's heading in that direction. Basically, the way that Argentina works economically is not well. It's just like not a country that has had its act together economically, which is really a shame because honestly, like it's a fantastic country, great people, really rich history, like a ton of, again, like you talk about. Sorry, I'm always partial to the beef and everything, but great beef and stuff like that, and so. you look at this and you say, man, it just is a country that has not been able to get out of its own way economically for quite some time now.
Well, Mark Fandetti made the point yesterday on the program that this country, 100 some odd years ago, or maybe a little bit more than 100 years ago, when compared to the United States, if you looked at the two of them, it was not abundantly clear which one would be the leader of the pack economically between these two countries. We were kind of in a similar position.
Sure.
And obviously for a number of different reasons, Mark pointed towards stronger institutions. The United States is wound up in the place it is in, and Argentina in one a lot less desirable from a development and pretty much every economic metric you can look at for the well-being of its people.
So about a year and a half ago, you had an election in Argentina in which Javier Milei became the president. And basically came in and said, look, I'm going to completely restructure the economy to try to save it, and embarked on a ton of different reforms. And quite honestly, the early results were really good for the first year or so.
When we talk about these reforms, Chuck, it was largely around slimming the size of government and doing a bunch of things that markets generally like when they look at emerging markets, trying to shore up the country's deficits and balance sheet and put it in a place where inflation is not as big of a problem as it has been. I think when he took office, we were talking 300 some odd % inflation year over year.
Yes. And so the issue that Argentina's run into, and again, like exactly why this happens on any timeline, you kind of have to just accept that this is, when it's happening, right now. But basically, you had an election in Buenos Aires a couple weeks ago in which Milei's party basically got, just wrecked worse than they thought they were going to. Buenos Aires is never, a huge center of support for him, but the numbers were just worse than I think people were expecting. And so shortly afterwards, because of questions about whether Milei will, again, be able to continue as president, in the future when he comes up for re-election, you started to see some pressure on the Argentinian peso, which as of this spring, they basically allow it to trade in a band of between 1,000 and 1,400 pesos to the U.S. dollar. So where this goes is, in order for Argentina to maintain that band, what they have to do is they have to sell dollars or sell something else and buy pesos. You quickly run out of money if there's basically a run on the bank trying to defend a peg like that. And so this is why Argentina has now basically come to the U.S. being like, hey, we could really use some swap lines and currency exchange to be able to make this work.
Help us make our currency not fall apart is what they are asking us.
Correct, which is something that Argentina has asked a number of times to, a whole bunch of different countries because, well, obvious reasons. And so the place that we're in now is, earlier this week, Treasury Secretary Scott Bessent indicated, hey, the U.S. Treasury is preparing a potential rescue package for Argentina in order to try to basically keep the country's balance of payments flowing the way that it needs to. Effectively, the big problem that Argentina has, they don't export enough to create demand for the Argentinian peso, and that's kind of why they end up in this situation, on a repeated basis. And the problem is because they then have to import a lot in order to, provide the goods and things and services they need for the country. Because of that, if you have a fall in the value of the peso, it tends to result in a lot of inflation in Argentina because they import so much. And inflation, as we know, is not what people like and generally not good for the party in power. So Milei's obviously concerned about this. So it gets to the point now where the U.S. is considering some type of bailout package for Argentina. We don't know exactly what format it will take. We don't know exactly what size. But this is something that now the U.S. government is talking about doing. And it seems pretty likely that it's going to end up happening. It's just a matter of working the details out.
So, Chuck, here's my big overall question. I understand to some degree why now this is happening to Argentina. I understand the path and the improvements that Milei has made. I very much struggle to understand why the United States is involved here. We are not a country with deep economic ties. We do not trade a ton with Argentina.
No, total trade's under $20 billion.
We are, whatever we do in this case will be an outlay of U.S. economic resources, of U.S. dollars in order to do this. Argentina does not have a great track record of making good on their promises of payments. And so you do have to sit back and ask, precisely why. And there's two justifications that I'm able to come up with. One is being printed all over the media, which is this is a politician who politically seems to align fairly well with our president. The second, that isn't being reported quite as much, but you do have to wonder, would China be willing to make this deal instead? And is there a legitimate reason to counter Chinese influence in South America? And I am much more behind that second argument than I am the first one in terms of justification. But in either case, you look at this and say, this is not Mexico. This is not a country that we have deep economic ties with. We don't have a lot of U.S. businesses setting up shop in Argentina.
No.
And so why precisely do we think we should be involved here? I think it's a very reasonable question for people to be asking, because it's our taxpayer dollars that are going to go towards a bailout.
And I think generally, again, when you're dealing with the Argentinian economy, it's... Do you have anyone in your life, Mike, that's not the most financially responsible?
Yeah.
If you
Should
give
I
that
name
person...
Do you want me to name them?
Sure.
Yeah.
It was Jules.
What?
That was his name. We called him Jules.
Okay.
Yeah.
If you give money to Jules,
you don't
expect it back.
It's going to be spent on lottery tickets every
time.
You
don't expect it back is the point. And it's kind of the same thing. If you give money to Argentina, you're making a gift, not a loan. You might call it a loan. You might call it a swap line. You might call it whatever you want. Generally, the expectation is you're probably not getting that money back. So go in eyes open, understand, that's kind of table stakes there, and then you can, kind of move on. Let's take a quick break. When we come back, we got trivia, and then we're talking Intel.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort, Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down on the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Time for trivia here in the Financial Exchange, and it's another day of sitcom trivia here this week. In 1993, Seinfeld added Jerry Stiller to the cast as George Costanza's father, Frank. Stiller only appeared in 26 episodes of Seinfeld, but his impact was immense. After Seinfeld ended, Stiller planned on retiring, but changed his mind after he was offered the role of Arthur Spooner on another sitcom. So our trivia question today is simply, which sitcom did Jerry Stiller star in after Seinfeld? I'll repeat that because I botched it. Which sitcom did Jerry Stiller star in after Seinfeld? Be the sixth person today to text us at 617-362-1385 with the correct answer. You win a Financial Exchange Show t-shirt. Once again, the sixth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, it's getting a little hard to keep up with who's investing in who in the tech space now.
Let's cover a few of those before we move on. We have the U.S. government investing in Intel. We have NVIDIA investing in one of its biggest customers, OpenAI, the owner of ChatGPT. What else comes to mind for you on the investment roundabouts in the tech space right now?
Honestly, I don't even. There's been so many of them. You've got. I'm trying to think of what Oracle's doing. Do they have anything that they announced in the last week or two?
TikTok.
It's just that there's a lot of money flowing in a lot of different directions. But Intel apparently now has approached Apple reportedly about Apple investing in the chip maker. NVIDIA took a stake in Intel as well, didn't they?
Yes.
So,
after the U.S. government did.
Yes.
How much do you need to be able to make even reasonably decent semiconductors, Intel?
Lots of money. So here's the thing.
I think they might do this, Chuck. I think my read on the NVIDIA investment was I get the diversification piece, but I looked at it primarily as how can we appease the government and make sure we're on the right track. And I think Apple's very interested in the same thing. And they're probably also interested in, hey, how can we diversify supply chain out of China and Taiwan?
I have real questions on both of those.
I do too. I don't know that it's going to be successful.
No, on whether Apple wants to do those things, like by investing in Intel. And I guess what I'm getting at is Apple's already done an awful lot to try to align itself positively with the administration.
Yeah.
I'm not sure they need to do more. Right? Like they've done a lot in terms of commitments they've made and things along those lines. There's a reason why, every announcement that you get about, semiconductors or smartphones or tariffs and this and that, it's basically, yes, Apple's not going to be included in this.
Chuck, the fact that we're reading about this right now, to me, indicates that they are going to probably have to at least seriously consider it. There's no way that Intel approaches Apple without approval from the U.S. government now.
Well, I'm not saying that the U.S. government wouldn't approve it. I'm saying I don't know. Here's the thing. Apple used to have chips that were designed by Intel in their phones and computers.
Yeah.
They moved away from that because they said, we can do the design in-house better, and we can find someone else to produce the stuff better. And by the way, they were right about that.
They were.
So I look at this, and if the cost of doing business is, hey, we've got to give, $5 billion to Intel, yes, Apple technically can do that, but why would they actually want to?
Yeah.
They don't get anything from it.
Then what is NVIDIA really getting? Right? Like,
You know my theory there is that's the gateway to NVIDIA eventually buying Intel.
Yeah, and Apple doesn't want to do that.
No, Apple doesn't want to own Intel. If they wanted to own Intel, they would have done it several years ago.
Yeah.
Or now. Before the U.S. government invested, they would have just been like, nope, we'll buy that. Thank you.
Would you like some breaking tech news that just came across Bloomberg?
What do you got?
Amazon and the FTC have reached a $2.5 billion deal in the Prime subscription case. For those of you following along, this was the FTC accusing Amazon of making it very difficult to cancel Prime subscriptions, and that is, again, I haven't read any of the details into this other than the headline flashing, but presumably that is the agreed-upon penalty here by the judge here in the case, that they will be paying the FTC some $2.5 billion. Presumably, some of that would be refunded to former or current Prime subscribers. I'm not entirely sure, though.
I wonder if they're going to have to change their Prime unsubscription process.
They did that in 2023 or 4.
They already did?
They already did, preemptively.
Interesting.
Yep.
Okay. I guess we can put that one to bed. I would like to... We got to hop forward to some other items in the stack because Tucker put some absolute bangers in here today. It's a fantastic stack, one of the best I've seen. I want to first go to... This is a story that we haven't covered at all, I don't think. Did you guys know that Jaguar Land Rover basically hasn't been able to make cars in 6 weeks?
No. This is my first time seeing it as well, that they got hacked and just are completely shut down like some 1980 computer-designed hospital.
And apparently, they thought that
right, that's where you see these stories, is the hospital had its records hacked, and they literally came to a screeching halt, and they're all relying on paper. But it now happened with one of the fanciest car makers in the world.
So they normally build 1,000 cars a day. They've pretty much been shuttered at their factories for the last 6 weeks. And it's gotten to the point now where the British government is saying that they may step in to buy auto parts from Jaguar Land Rover suppliers so the auto parts suppliers don't go out of business. I mean, this is wild. How have we not heard about this or covered this at all?
I hear you. This is a fairly big story. Once again, in the auto sector, we've covered a lot about cars today, and this is not even tangentially related to the problems that we're seeing in the U.S. debt markets around autos. But, this is a huge company in the UK, and to be brought to a complete screeching halt over, frankly, something as I'm not going to call it as minute because I know that these things take companies down all the time, but a hack is just shocking.
It's pretty wild, and it speaks to the lack of resilience at a lot of companies that run into these problems. You remember when the Colonial Pipeline got hacked a few years back?
Yeah.
That took them, a couple weeks to get the oil flowing again?
Yeah, again, people always think about these hacks as, it's going to take down the computer records for a company and they're going to have to go back, or it's going to take down Amazon's website. Or do you remember I feel like there were a few brokerage platforms that, their websites went down during different periods of time for denial of services. And honestly, the more impactful stuff is there are companies that have websites, obviously, have data in the cloud, but they're businesses that aren't at all related to doing business with customers over the internet who are being brought to a screeching halt with their physical manufacturing processes.
Or do you remember the one last year with the auto dealer platform?
Yes.
The sales platform?
They couldn't sell anything.
No, it was like dealers just couldn't sell anything for like 6 weeks. It was like, oh, write this down. It's like, you want me to do what? Yeah, it's kind of wild, this stuff. Let's take a quick break. When we come back, we get the trivia answer. We got Wall Street Watch, and we're talking Social Security.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest risks to retirement isn't just market volatility, it's longevity. People are living 25 to 30 years after they stop working, and that gives inflation plenty of time to work against you. At just 3% inflation, your expenses double in about 23 years. Add to that the fact that healthcare costs typically rise faster than general inflation, and your later years could be your most expensive. Without a plan, that combination can put real pressure on your savings. That's why we've put together a brand new guide called Inflation in Your Retirement Plan. The guide shows you ways to balance longevity risk with rising costs and strategies that may help you make your money last through decades of retirement. Call 800-393-4001 to get your free copy today. 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Mark became familiar with after his military service ended back in 1984. As Mark built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Mark works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Mark Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Generally, for a married couple, you have several choices. The most commonly used one is you're going to make the surviving spouse the designated beneficiary. It doesn't shelter assets from estate taxes. It just passes to the surviving spouse. It avoids probate, and it's probably the best way to go from an income tax perspective, not necessarily an estate tax perspective. Another way would be you could technically name the trust the beneficiary of the IRA when you pass. That at least will help it shelter assets for estate tax purposes and still provide for the surviving spouse. But from a Medicaid perspective, it will then protect it from the nursing home, but it'll take 5 years. Perhaps the newest and best way to do this would be to name the estate the beneficiary, provided you are over age 73 or over. That way, it goes through probate into the will. It is sheltered for estate taxes. It is immediately protected from the cost of long-term care for the surviving spouse, and the surviving spouse has access to it as well.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide, Why Name Your Estate an IRA Beneficiary, right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, seeing a little bit of a sell-off here as Wall Street reacts to a new batch of economic data points published earlier this morning, including better-than-expected jobless claims, and upwardly revised second-quarter GDP reading, and existing home sales. Right now, the Dow is down by 0.2%, or 97 points lower. S&P 500 down about 0.5%, or 30 points lower. NASDAQ down 0.4%, or 95 points. Russell 2000 is down nearly 1% lower, or 22 points. 10-year Treasury yield up 5 basis points and is now at 4.199%. And crude oil retreating about 0.5% today, trading at $64.68 a barrel. Starbucks down over 1% after the coffee chain announced a $1 billion restructuring plan that involves closing some of its North American stores. Furthermore, about 900 non-retail employees will also be laid off, marking CEO Brian Niccol's second round of layoffs since he took over. Meanwhile, Oracle shares are slumping 5% today as worries around the AI trade continue to pressure the stock. Separately, Rothschild & Co. Redburn initiated coverage of Oracle with a sell rating, saying the market is materially overestimating Oracle's cloud revenues. Sticking with tech, where Bloomberg reported that Intel has approached Apple about investing in the chip maker. However, the report notes that talks are in the early stages. Earlier this month, we saw NVIDIA said it would invest $5 billion in Intel. Intel stock is up nearly 5%, while Apple shares are down over 0.5%, up over 0.5%. CarMax sinking 20% after the used car retailer saw its quarterly results come in below estimates, and Amazon will pay $2.5 billion to settle FTC allegations that it duped users into paying for Prime memberships. Amazon stock is dipping modestly on that news. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: which sitcom did Jerry Stiller star in after Seinfeld? That would be The King of Queens. Jay and Peabody Mass is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Jay. We play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, we got a piece in the New York Times. It's titled, "A Diminished Social Security Workforce and Its Customers Feel the Strain." The big thing, the Social Security workforce has shrunk by about 12% this year due to cuts from DOGE this spring. On top of that, you still have more and more people that are claiming each year because you have, baby boomers retiring in large numbers. And you also have, some mechanisms that are being shuttered. I believe it's in the next week or two, Social Security checks are going to be a thing of the past. It's going to be a direct deposit required. And so with all these changes, the question is, hey, can people still get, decent service at a Social Security branch? And the answer is it's getting harder just because there are more people competing for fewer spots to actually get help from someone at Social Security.
Yeah, I don't find this immensely surprising. I also can't say, though, that when I talk to the average person that prior to the Trump administration cuts to Social Security, that there was a high degree of satisfaction with the type of service they were getting from Social Security in the first place. So I do think it's gotten worse, but I don't know how to measure how much worse, I guess would be my point, because the stories that are laid out in this example of payments being stopped and appointments not being available for weeks,
We've heard that for years.
I've heard that same story for years. And
yes.
so I do think it's probably gotten worse just because, when you cut 12% into the staffing, it becomes problematic. But it's really difficult to measure how much worse. I do think we do get regular reports. The one thing that I'm sure we can definitively point to, and I don't have the data on me, hold times. Really easy to track. I know the government does keep an eye on it, and I think those have gotten markedly worse when you call into the Social Security Administration. I have heard that, the hold time to get somebody on the phone is pretty bad, and the wait time to get an appointment has gotten a lot worse. And I don't know what you do about that other than to beware, hey, if I am intending on starting Social Security, or if I have a complicated question surrounding Social Security. For instance, I've been affected by the Social Security Fairness Act, and I never claimed before, or I've got a new disability, or any of those types of things are tricky, and you just kind of have to be prepared to, in many cases, wait weeks or months to get your case heard in front of somebody to deal with the problem.
Yeah,
that seems to be the reality of it right now. Folks, want to talk to you again about a couple events coming up here from the Financial Exchange and Armstrong Advisory Group. We're going to be doing live broadcasts of this show this fall in October in two separate places, one down the Cape, one in the Boston area. And you can come on down. You can check out part of the show or all of the show if you're around. Following that, we're going to be doing a free lunch. It's all free. You do need to register, but free lunch and then a chat with the Armstrong Advisory Group about the state of the economy, inflation, artificial intelligence, markets, where things are right now, and how it may apply to you and your financial situation. We love doing this program. We love doing these events. They're always really fun. We get lots of great questions from the audience, both during the show and then after the fact. If you would like to register, the first date is on October 9th. The second one is going to be October 16th. That first one is down at the Margaritaville Resort on Cape Cod. The second one is in Chestnut Hill at the Showcase Superlux on October 16th. You can call us at 800-393-4001 to register, or check it out on armstrongadvisory.com. But you must register ahead of time for this event, and space will be limited. So please do call or check it out online to get more details. Again, October 9th and 16th. Cape Cod at the Margaritaville, Chestnut Hill at the Showcase Superlux, 800-393-4001 or armstrongadvisory.com. And then one other little thing that I kind of forgot about because I'm not going this year, but Paul from the show will be there. If you've never been, the station down on the Cape does this annual listener party. And it's actually this Sunday, the 27th. It's down at the Lobster Boat on Route 28 in West Yarmouth, and there you can just show up, and there'll be a bunch of hosts from XTK that are down there for the event. So this is the first time in a few years I haven't been able to make it, but our colleague Paul will be there, so check that out as well.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, I got more things I need to hop around to again, just to make sure we get to all these stack items that are really exciting to me. Wall Street Journal exclusive: Delta replacing engine units in effort to address toxic fume surge on planes. So here's what we're talking about here. Every plane has something called an APU on it. Every commercial jetliner does. It's called an auxiliary power unit. And basically, it's right in the tail of the aircraft, and that's the engine that's running when you get on the plane to actually, keep, the air conditioning going and all the, systems working on the plane before they back it up and turn on the engines that are on the wing. And the way that the APU works, one of the things that it does, it generally provides what's called bleed air into the cabin, because in order to keep the cabin pressurized and keep, the air conditioning and everything working, you need to get the air from somewhere, and it comes from that APU. So you take this hot air from the engine, you basically put it through a cooler, you filter it, pump it into the cabin, and that's how, you get the air into the cabin. Apparently, on a bunch of Airbus planes, Delta has been having trouble where that APU has been just not really putting clean air into the cabin. I guess it's been putting pretty dirty air in, to the point where you've had, some really kinds of problems, such as, brain injuries for crew and passengers because of, the toxicity of these fumes. And I had no idea that Delta was going through this with these planes, but it's because they hadn't previously disclosed this program, which began 3 years ago. Isn't that wild?
Yeah, I mean, I'm glad I'm not a frequent flyer. I guess I have a few questions about this. One, this is clearly Delta's problem, but probably Airbus's fault, and so I'm not interested in who's paying for it. I am interested in how many other airlines have the exact same problem and haven't yet told us about it. Two would be, I really thought I had some good ideas on my flight home on a Delta Airlines play a few weeks ago, but I might have just been ingesting toxic fumes, and so maybe they weren't as good an idea as I thought, and I might need to go revisit my work there.
I got another one that I want to get to that wasn't in our stack, just because I saw the headline on the Wall Street Journal and I had to click on it, and it was just not great, quite honestly. The title of it is Gen Z unemployable?
No.
What are we
doing here?
Hiring managers prize achievement, learning, and work. Today's youth value pleasure and individuality. And it's like clockwork. It's, someone has, a bad experience with like a 22-year-old worker, and immediately you've got to paint the entire generation as, they'll never amount to anything. And again, this has been said about every generation that's, ever been 22, which is every generation, because I'm sure that, all the baby boomers who are listening now, I bet you got called, a bunch of lazy stoners back in 1969 when you were hanging out at Woodstock, but ultimately, you turned out pretty good. Likewise, when Tucker and I were chowing down on avocado toast 15 years ago,
hell yeah,
everyone called us a bunch of lazy stoners too.
Hell
and
yeah.
You know what? We turned out all right as well. So, Gen Z, yes, they're 22, they're 23, they're pretty immature because everyone's pretty immature at that age. They're going to make mistakes. They don't want to work all day, every day generally, because when you're that age, you want to have more fun. And like every other generation, I'm sure when we talk about them 10, 15 years from now, they'll have learned, a whole bunch of lessons. They'll have grown up, had kids, done this, that, and everything. And I get so frustrated when people just try to paint 22-year-olds as being persistently lazy when it's just like, no, you're that age and you just have different priorities than someone who's 40, 50, or 60. And it changes all the time.
It's just such lazy assumptions. Like, there are legitimate differences between that age demographic and older ones. Like, I think there might be something to the way that they were more heavily raised on digital devices and fewer opportunities to play outside with friends. Like, these are things that I think are legitimate points that can be made about that generation, which makes them different from even their millennial cohorts. But we always just return to this lazy reporting of, the next generation is all, they don't want to be in the same job for a long period of time. They don't care about work. They have no ethic. They don't know how printers work. Like, these are just the laziest arguments for not hiring 22-year-olds that I see, and they just get repeated every 10 years.
Yeah,
it's just exhausting.
It's just classic.
Hey, speaking of the Wall Street Journal, before we go to the break, I just noticed this 2 minutes ago when it was published. Headline: auto industry is flashing a warning sign on U.S. economy, which is something you talked about in the first hour of the show, Chuck.
Do they listen to the show?
Yes.
If you read the article, Chuck, it literally says everything you just said. I'm not kidding. It's on Wall Street Journal right now.
Is it on the front page?
Oh, front page, yep. Go and read it. It's literally what you said.
Published 3 minutes ago. It's Christopher
And
Ott.
you talked about it around 10:40.
So this was published at 11:43.
Correct.
It talks about CarMax, which we covered, Ford,
which we covered,
Tricolor, First Brand. I'm telling you, they
probably do, Chuck. I would fine, great. Just, mention us.
I just want a site,
Yeah.
Little
hey, hat tip.
Yeah, hey, Chuck Zodda on the Financial Exchange said all these things, and you should, tune in. But hey, what are you going to do? It's again, there's something there. I don't know what, but we'll keep paying attention to it. Quick break here. We got what do we call it? Stack roulette. That's it. We got that coming up next.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com. This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection. Learn how naming your estate a beneficiary can reduce estate taxes, protect assets from nursing home costs, and avoid the 5-year Medicaid waiting period. Call 866-848-5699 to get your free guide today, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Inflation, housing costs, and rising interest rates are putting pressure on families everywhere. From higher insurance and taxes to volatile markets, today's economic landscape is changing fast. This is Chuck Zodda from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall, first at Margaritaville Resort Cape Cod on October 9th, and next at the Showcase Superlux in Chestnut Hill on October 16th. Call 800-393-4001 to reserve your spot. We'll discuss how to manage risk, protect your retirement, and create a plan that can handle economic ups and downs. Whether it's core inflation, market volatility, or policy changes, you'll learn about strategies that may help you plan smarter. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Looking for a getaway that's easy, warm, and unforgettable? Discover the magic of the U.S. Virgin Islands, St. Croix, St. Thomas, and St. John. Just a short flight from New England with no passport needed and no money to exchange. Soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your fall escape now at visitusvi.com. That's visitusvi.com.
Mike, what do you got for Stack Roulette?
Utility prices, Chuck, is what I've got. Wall Street Journal has a piece today. Higher electricity prices aren't all good for utilities. In fact, look, this story reminds me of the one that we talked about a few weeks ago, which is everyone's out there because prices are moving very quickly and looking for somebody to blame. And a utility company is, good as any scapegoat to drag out there. Power prices have been rising very fast. Electricity prices in August were 31% higher than 4 years earlier, compared with about 19% for prices overall. So they are considerably higher than overall prices and just up massively.
It's going to get worse.
It is going to get worse, and lawmakers are going to try and point the finger at different people, and frankly, I think most of it should be pointed back at themselves. The reason
100%.
The reason that power prices are up is a fewfold. One, those same lawmakers have not allowed them to previously raise prices enough to do all the deferred maintenance on their infrastructure. Remember, almost all utilities in this country are heavily regulated, and all the prices are controlled by either elected committees or usually appointed committees. Two, these same lawmakers are the ones that keep voting down big infrastructure projects in their own areas. Sometimes that's voters, but oftentimes it is the lawmakers themselves who cast these votes, voting down things like nuclear, voting down things like high something power lines from Canada, high tension power lines from Canada. We are all to blame for all of this, and our lawmakers are also to blame, but they're kind of taking our lead on it. And so, sure, go and yell at Eversource if you want, but that's not going to change the fact that they still need to raise prices or else they're not profitable.
Right, and if you don't, here's the reason that we have regulated utilities, is because when the power goes out, people die. It's that simple. Like, that is the reason why you have utilities that are regulated to make a profit. Does that mean that it is the, ideal economic setup? No, but we've decided that generally we don't want to allow for large power producers to be able to go out of business because historically when that happened, really bad things happen. So, ultimately, yeah, you can, try to be a tough guy and be like, I'm going to negotiate with the utilities to make sure that they're, really, giving us the best deal. Okay.
You already were.
Right. There's only so much that you can do on that front. And so it's something where there is no free lunch. And we have underinvested in electricity generation and distribution for probably about a generation or so in the United States. I would say the last 30, 40 years. And now we're going to have to pay for it. There's no way around it. There is no free lunch on this. And trust me, I've looked because I love
free lunch.
Free lunch. But there isn't one on this. Seasonal retail hiring to fall to lowest level since 2009, signaling trouble for holidays, report says. This is a report from the job placement firm Challenger Gray and Christmas. Like, I continue to have no idea what to make of all the conflicting signals that we get in the labor market.
Yeah.
It's just, some's good, some's bad, some's fine. Like,
Points in 9 different directions.
It's a lot like the New England Patriots offense. They look great for brief stretches. They look horrible for brief stretches, but ultimately you're just kind of like, they're there.
And puke.
That too. We're going to take a quick break for the rest of the day. Stocks remain modestly negative, and we will finish out the week tomorrow. We've got some PCE inflation data. Make sure you tune in, and we will discuss.